2 weeks ago, silver hit an all-time high of $80 per ounce. On December 29th, silver fell almost 9% in a single day. Most people saw that and assumed the move was over. It isn't, because in less than 24 hours, China is about to restrict access to a major portion of the world's silver supply. And when that happens, everything tied to modern technology, your phone, your car, your electricity, gets more expensive. Let me show you why. At the start of 2025, silver traded around $30 an ounce. By late December, it reached $80. That's a 168% gain in 12 months. Gold rose by about 70%. Oil barely moved. Bitcoin grabbed headlines. But silver quietly tripled. And this wasn't driven by hype or social media. Silver is essential to modern infrastructure. It's in solar panels, electric vehicles, smartphones, data centers, medical equipment, defense systems. Silver isn't optional. It's the metal that makes advanced technology work. And right now, supply is falling behind demand. Global silver supply is roughly 1 billion ounces per year. Demand has exceeded supply for 4 consecutive years. That imbalance matters, because when shortages persist, inventories get drained. Global silver stockpiles, especially in major financial vaults, have been falling at record speed, hitting multi-year lows. The system is already stressed, already tight. And then, at the end of December, China made a move that changed everything. Starting January 1st, 2026, tomorrow, China is introducing new export restrictions on silver. Here's what that means. Silver exports now require government licenses. Only state-approved firms can ship silver abroad, and those firms must meet strict production and financing thresholds. Overnight, this effectively shuts out most small and mid-sized exporters. China isn't doing this randomly. China controls a massive share of global silver refining and downstream supply, and it needs silver for its own electric vehicles, solar manufacturing, and technology sector. So it's keeping more of it at home, which means the rest of the world just lost access to one of its most important supply channels. You can tell how serious this is by who's talking about it. Executives in the electric vehicle industry are publicly warning about silver constraints. Even Elon Musk commented on it, saying silver is critical to many industrial processes. When the CEO of the world's largest EV manufacturer flags a raw material issue publicly, it's not casual, it's a warning. So what does this actually mean for you? Electric vehicles. Each EV uses roughly 25 to 50 grams of silver. Global EV production last year was around 14 million vehicles. That's hundreds of millions of ounces of silver demand, just from cars. When supply tightens, manufacturers compete for materials, prices rise, and that cost gets passed on to buyers. Your next EV could cost thousands more. Solar panels. Solar is now one of the largest sources of silver demand worldwide. Silver is critical for conductivity, and there's no viable substitute. As silver prices rise, solar installations get more expensive. This slows rollout and keeps electricity costs higher for longer. Your phone. Every smartphone uses silver in connectors, circuits, and solder. When industrial silver becomes expensive, manufacturers don't absorb the cost. They raise prices. AI infrastructure, data centers, chips, and networking equipment all rely on silver. As AI expands, so does silver demand. And right now, supply can't keep up. This isn't a niche problem. It touches almost everything. Here's where things get interesting. In late December, silver surged toward $80. Retail interest exploded. Speculation picked up. Momentum was accelerating. Then on December 29th, the CME, one of the world's largest futures exchanges, raised margin requirements on silver contracts. Suddenly, that forced traders to liquidate positions immediately. Forced selling. Silver dropped nearly 9% in a single day, the largest one-day move in years. And that matters, because when exchanges change rules mid-game, it's not to protect traders, it's to protect the system. Some analysts have compared this moment to earlier periods when silver markets became dangerously unstable. We're not there yet, but the stress is visible. From here, there are 2 paths. First, the supply crunch intensifies. China maintains export controls. Inventories keep falling. Silver moves toward $100 an ounce. Manufacturing slows. Costs rise. Inflation stays stubborn. Second, the market stabilizes. Recycling increases. New supply comes online. Prices cool into the $50 to $60 range. But major banks have already warned that silver volatility in 2026 could exceed gold. They're not positioned for calm. They're preparing for disruption. So what do you do with this information? You don't need to panic, and you don't need to buy silver, but you should understand the timeline. China's restrictions begin on January 1st. Expect volatility through the first half of the year. If you're considering an electric vehicle, earlier may be cheaper than later. If you're planning a solar installation, be aware that costs could rise. If you're upgrading tech, supply pressures are real. The goal isn't fear, it's preparation. Silver isn't about getting rich. It's a warning light on the dashboard of the global economy. For the past year, silver prices have been signaling a supply problem. China's export controls make that problem official. What happens next depends on how fast governments, manufacturers, and markets adapt. But one thing is clear, the era of cheap industrial metals is ending, and everything built on them is about to cost more. Stay aware, stay prepared, and don't say you weren't warned. Before you go, if this video helped you understand why something is happening, not just what happened, this channel is for you. I track the signals most people miss, long before they show up in headlines or prices. Subscribe if you want to stay ahead of these shifts, because in markets like this, awareness